The big picture is the things that we've been warning about for some time now, many of us for years, really, but more recently, last few years, are all starting to kind of come together. $1 trillion of debt added in 100 days, and record deficits, no spending restraint by Congress, the approval of the ETF, and the multiplier impact that's had on the price of Bitcoin. And as we know, it's kind of been a relentless uptrend, strong and up to the right since 50,000 when the ETF was approved.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In this video, he will share his insights on what's the effect of the approval of the ETF on the price of Bitcoin? What's the future outlook for these assets? How is the market reacting to the record highs of gold and Bitcoin? What's the big picture that experts have been warning about for years? Let's join Lawrence in a conversation about these topics and more.
There was a letter from the Industry Swaps and Dealers Association to the Federal Reserve saying, hey, you know what, we really think you ought to throw away this SLR, this limit that you place on the banks and their ability to buy Treasury debt. And of course, the reason for that is that there's a lot of Treasury debt to be sold and the number of buyers are slowly but surely shrinking. And if you really read through the lines on that carefully, and it's a lot of inside baseball and monetary plumbing, it's more or less kind of QE infinity, or it'll give the banks the ability to just in an unlimited way monetize the debt. And put it on their balance sheet because they don't have to count it as reserve. And so they can more or less print money to buy the government debt. So it hasn't been approved yet. It was a letter, but it's clearly those kinds of things. They start with a letter and then they come with a Federal Reserve proclamation that this is what we're going to do. And they did it in 2020. And they did it in 2020 because at that point in time, they needed to do it because the debt, they were having a hard time selling the debt then as well. So to me, it's a big deal. And I'm not sure the market's fully absorbed it, although you could also argue maybe the market has absorbed it because the two sound money assets, gold and Bitcoin, are both at record highs, or very close to. Gold's backing off a bit today, but gold had been constrained within a range of kind of a $2,100 top, $2,050, $2,100 top, and it broke through that rather decisively in the last couple of weeks. So, I think the wider world is awakening to the issues that many of us in this area have been talking about for some time, and that is that we have a sovereign debt problem, and that the likelihood is that the solution of the government will be to monetize it, and that goes to the letter I just referred to. So that's kind of the climate we're in, and I kind of see the sky as the limit for both of these assets. I expect they'll be higher in a month, and I expect they'll be much higher in 6 months. So.
The unpredictable crypto market saw a gloomy Friday as Bitcoin sellers took over. Bitcoin had a hard time maintaining its position below $65,000 due to weak ETF inflows and unfavorable macroeconomic signs. Let's understand the reasons for this downturn and what might come next. Bitcoin is nearing the key $60,000 support level during a tough weekend sell-off. Despite the downward trend, there's still a bullish outlook due to market dynamics and institutional interest. Robert Kiyosaki, the famous author of Rich Dad Poor Dad, shares his thoughts on investing, focusing on traditional commodities like gold, silver, and oil, and the unique qualities of Bitcoin.
So the problem that I think the government is going to have as they continue to run these deficits, and as they continue to go into so let's keep it really simple. 101, the government spends more than it takes in tax revenue. We know that, and it's getting worse. How do they finance that? They finance that by issuing a bond. Okay, the bond gets an interest rate price gets set on that bond, which is a reflection of the supply and demand for those bonds. And if there is no demand, kind of by definition, that means the interest rate price has to get higher. And that higher interest rate price would then lead to more interest expense for the government, which it would kind of lead to what James Lavish has said so clearly is a debt spiral or a debt death doom loop. And so the federal government and the Federal Reserve have a real incentive to try and keep interest rates under control. That's a key piece of what they have to do, because if we went to, I mean, we're at, on the 10-year now, we're in the fours, but we were at 5, and we saw how that created a problem last fall. And so if we went to 5, 6, 7, 8 on the 10-year and higher rates on the, or similar rates on the shorter durations, the government interest expense would blow out even further. And it's already blown out. It's over $1 trillion a year, up from much less than that 3 or 4 years ago. But and so it would accelerate the funding problem and the financial problem that the government has. And so as a result of all of that, the government and others are looking for ways to find more buyers of those bonds. And because to the degree that they can find a buyer that creates supply or creates demand, which would bring interest rates down, and that's what they want to have happen. They want to have interest rates come down so that their funding costs are lower. The banks can buy these bonds, and often they do, and then they quickly flip them to the Fed or flip them to somebody else, or they can leave them on their balance sheet, but they're somewhat constrained in terms of what they can leave on their balance sheet because of what you referred to, the SLR, the supplementary leverage ratio. And it's confusing even to experts like me. It's somewhat confusing how this whole mechanism works because it's kind of tricky monetary plumbing that nobody really pays attention to. But boy, when this ISDA letter came out, those of us who were in the know, Fed Guy 12, Joseph Wang or Luke Roman, or those of us who are watching the Lin, or those who are watching the monetary plumbing very carefully, like, holy shit, if I'm reading this correctly, this means that these banks can buy as many of these bonds as they want, no problem, and they can create the money to do it. And so it's kind of, broadly speaking, it kind of looks like QE infinity. Now, because of the way it's sort of backdoor and subtle, obviously the Fed right now, if they were to stop QT and announce QE, that would be seen as being massively inflationary. And that would not be a good thing for them. That would not help in their fight against inflation. But if they can get the banks to do their dirty work by changing the regulations that the banks are underneath, hey, that's great. They get to the same place. It's just not called QE. So I think that's kind of my synopsis of what's going on.
In the last 2 months, the crypto community has been buzzing about a wallet affectionately named Mr. 100. This moniker originates from its pattern of receiving 100 Bitcoin deposits every few days, leading to speculation that it might belong to a wealthy individual from the Middle East. However, on-chain analysts from Arkham Intelligence suspect that this wallet is actually the cold storage of Ubit, a major South Korean cryptocurrency exchange. Robert Kiyosaki has issued a stark warning about an impending financial disaster, which he believes will devastate baby boomers. A crypto analyst predicts Bitcoin could exceed $330,000, defying historical growth patterns through a combination of pattern disruptions and the theory of diminishing returns. Venture capitalist Tim Draper forecasts that Bitcoin will dramatically transform El Salvador into one of the world's wealthiest countries within 30 to 40 years. There's activity in the Bitcoin market, with a whale from 2015 moving sleeping Bitcoins worth over $163 million. There are 34 days left until the Bitcoin Network's halving event, expected on or around April 20, 2024, which will reduce miners' rewards by half. Bitcoin's price has remained above $60,000 throughout March, reaching close to $74,000 on March 14. Between on-chain fees and the price increase, these factors could offset revenue losses from the halving for miners. However, the halving will make mining much less profitable, particularly for those with high operational costs, potentially leading some to cease operations. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.